Talk about March Madness. It has been a busy start to the first trading week of this month. And I don't know about you, but my head's kind of spinning. So I decided that here I am getting ready for the Friday close, and I'm just going to do a quick tour of major markets and share some key levels I'm seeing. So my name's Hima Reddy. If you're new here, I use price action candlesticks, market timing, that's forecasting, and momentum, my RSI Power Zones indicator, to boost my trading and that of our tribes. And what I'm going to do is only kind of unpause and record the screen and speak to you when I think there's something significant to share. Now, I will always cover the S&P 500 markets because that's my happy place. I trade the E-mini S&P 500 futures. I publish research on it and the SPY ETF multiple times a week in my S&P Edge Pro service. But let's just take a look at the SPX cash index here for a moment on a weekly chart. Because listen, since the election, the week ending November 8th, there's just been all this drama. And lately, with tariffs uncertainty, with all the changes the administration's making in its first 100 days, we're not even at day 50 yet, there's been quite a lot of action. But I just want you to keep your eye on the big picture, which is this, that despite all this action, we still haven't taken back half of the move from the August 9th low, okay? And notice that that level is very comparable to this old top from the week ending July 19th. Old tops are a big, important thing in GAN analysis, G-A-N-N. And so we're basically kind of at an important support area. Also, my RSI power zones are holding the bull support power zone. And again, this weekly bar is going to finish shortly, but it's pretty much where it's going to land for the week. So I will revisit it heading into next week, but this tells me that the pain we felt may be slowing down, okay? I need more evidence. So let's just look at a daily chart for a moment, and then I will hop to other markets. So the daily chart, here's that same analysis where we're going from the August low to this most recent high from February 19th, and just shy of that 50% retracement, and again, that old top. Now, also on the daily chart, you can see that we broke below this January 13th range on the SPX, and that's what was kind of maintaining the uptrend. So this is where it's not like, oh, show's over and we can all wipe our foreheads and that we're going to rebound. Even if there's a rebound, I don't know how much steam it'll have, all right? So I'll cover what I think the S&P 500 markets are doing day to day in my ES futures reports. I'll tell you right now, I do think we're probably going to have a rebound on Monday, but I don't know how much steam it's going to have. All right, I'm going to take a moment, look at the other broad markets, some commodities and more, and I'll be back when I have something to share. Now, the NASDAQ via the E-mini NASDAQ 100 futures is much weaker than the S&P 500. And that's not a surprise with what's been going on in tech stocks. And that is not a good sign for the NASDAQ. So I think even more that, again, if we get any recovery early next week, it may be short-lived, and what I'd really focus on in this is the next downside target being this whole range of this September 6th low. And why I dial in my focus to certain price bar ranges is something I get deep into in my 4 zones RSI coverage system. That's one of the best places to start with my education, my approach to the markets. It's got my RSI power zones indicator and education, and members get to come to monthly group coaching live. And with so much going on in markets right now, I'm even having an extra session. So I already had one Wednesday, March 5th, but we're going to have a bonus monthly group coaching on Wednesday, March 12th at 4:30 p.m. Eastern. If you're a course member, you get invited to attend live, and you'll get the recording in your portal. So yeah, not looking so hot for tech. Let's keep going. Okay, I just have to say that the talking heads on TV, especially like when it comes to politics, are like, the Dow is crashing, and the Dow hasn't even taken out its January low. So they just need to relax. When you look at what is going on in the most recent action here, we've revisited this previous candlestick pattern, a piercing line, and are holding nicely. So Dow has room for a rebound, and Dow is in a better, stronger position than the S&P or NASDAQ. Now, I do like looking all the way down to the small caps, the Russell. So here is the continuous contract chart of the E-mini Russell. And on a weekly chart, you can see it is poorer performance than the others because it's retraced way more than 50% of the move from the major low. That was back in October 2023. The August low wasn't as big a deal. In fact, if you look at the August low, we've already retraced pretty much all of that move. Okay, so the small caps are definitely in the poorest position here. And if they have a recovery, I don't know how much it'll get past the February highs. All right, oil. Let's talk about this for a second, right? The whole drill, baby, drill thing. That's on Trump's agenda. He wants to put into effect, but it's going to take time, and we're still consolidating. This is a monthly chart, folks, of oil, and we're still hanging out. But we have gotten closer to $60 a barrel, which is a good sign. And perhaps with these policies, we may see that drive lower. So I wouldn't be bullish on oil based on what this current administration wants to do. However, if we just look at the latest chart, we are coming into a support area. So I wouldn't stay short too long here either, because we're coming into this September 10th range that's currently holding this downward action. Bitcoin on the daily chart beautifully just hugged that 50% retracement. Give it a real quick kiss and then is jumping up and away. The RSI power zones came all the way back to the bear support power zone, and the last time they were there is when we were in this consolidation and rocketed higher. Now, I don't necessarily think Bitcoin is going to shoot straight up, but I do think it's on the beginning of a new path higher. And this is where using simple trend lines, nothing fancy, but just getting a sense of what the trend angle is helps. So you just kind of keep drawing them until you have stopped touching the price action. You see? And now I have this fan. Now, the traditional fans usually are from one origin point. This is my little tweak on it. But now these three lines will give me sort of zones to watch if Bitcoin breaks higher. So if I'm going to be exact on them, connect January 27th to January 30th, connect January 30th to Feb 21, and connect Feb 21 to March 3rd if you want to emulate those lines, okay? It's still too early to know what direction we're going. Okay, Amazon on the daily chart, there's a forecast that you could have drawn as early as February 5th to prepare for the possibility that we drop down to 192.93 by March 5th. It happened just 2 days late. Gotta love forecasting. I teach these methods in my loss forecasting trading system. Now, with this in mind, knowing that this forecast was essentially met, what do? Well, I teach another tool in that system that'll help you determine when the current downtrend might be over. And this is supported by what's going on in the RSI power zones as well. So right now, there is room for Amazon to turn higher, and just on a basic technical analysis level, getting above 209.98 would be what's needed to resume the uptrend. NVDA continues to trek down towards the forecast I had laid out for it to reach about $103 here by March 13th. So this forecast was made on February 26th, so far it's playing out nice. And while we stay beneath the high from March 5th, I think we still have room for it to happen. If we get a stronger recovery, then we may want to recalibrate with a more updated forecast. I'll wrap up with the dollar index, which is really taking a beating here this first week of March and potentially headed back towards this October 4th range. If we expand that same chart out to a daily time frame, you can see that we're hovering at support that's ahead of that at November 5th. Shocker, shocker, election day. I can't tell you enough how everything that happened during election week 2024 is really important levels to watch relating to the current market action. So if we're able to get below that election week low, 103.37, then I'd watch out for moving down towards that bigger weekly chart range. But if we stabilize here and are able to have a little bit of recovery, then maybe we see some relief back towards 106 on the dollar index, at least over the next few days. So there you have it. I just got in under 10 minutes, a little look around the world at the markets and the interesting things I noticed. If you found this helpful, go ahead and like this video, drop a comment down below, subscribe to my channel if you haven't already, drop a comment if you're reading this on the blog post. And if you found this sort of like, hey, here's what I'm seeing in 10 minutes, helpful, then really give me that feedback so I'll do it again in the future. If you enjoyed this, be sure to come to Monthly Group Coaching Live, and you can see any of our events calendar at hemaready.com/events. So you can do this by going to my website and just clicking live events, no login, no nothing, I personally update this calendar with what I have going on. And you can see right now we have a bonus monthly group coaching coming up March 12th. And you got to be a member of one of these courses to get an invite. All right? Good luck out there. Have a good weekend. Rest up, and I'll catch you soon.